What's up, family? Jamie here, and this is actually a journal to myself. So, hello, Jamie. How are you today? I'm great. Thanks for asking. Um, so this is day three in my August 2024. Let me see if I see the 2022 YouTube model in the New York Kill Zone extravaganza. So I'm just gonna get to it, and hopefully this will be less than, I don't know, 7 minutes or less. So first, I want to point out that we had a monthly low here, and this was the draw on liquidity. So there's that. Then I want to go to just the 15-minute chart to see how we came down here and didn't take the liquidity. We came here and didn't take the liquidity. And as ICT talked about in his 2024 mentorship lecture one, he talked about the market looking for these clean edges. So we'll see if this ends up being the initial draw on liquidity to come run this out and then just see what happens after that. But that's a nice observation. I was like, that's wild. The market knows what it's doing to come all the way down here and not take it out and then come all the way back down here and not take it out. So how dare you? So when I didn't see this morning, I just looked now. And so I would presume this morning, if I was looking at this in this window, I would have been bearish because I would have been like, surely it's going to come down here and tag this out, take it out this low and this low. Surely it's going to come down and do that. So I would like to think that my bias or that my draw on liquidity would be these lows down here. So I went into the chart and I said, well, let me see if I see the setup. And you kind of get it here. Again, I'm not walking through the setup. I have videos where I know I have videos on my channel where you can see the actual setup for the 2022 YouTube model. So I'm not going through that here, but I would like to think that this right here is an entry for a short. Not only do we have the fair value gap, but we also have the BPR. ICT says we can have a market structure shift even when we don't close below it. It just needs to break it, a short-term low. So we got that there. We have all the elements. Now, I could have easily been like, okay, I'm going to get in here, I'm going to take the trade, and I'm going to take it down to this low, or at least this low. But we know that this kind of thing happens all the time. So this is when you might want to front run your entry. So let's say I got in here. And mind you, I just want to see, can I see this setup? Uh, Stop should go at least right there. Like, I'm not trying to risk that kind of money, yo. Um, um, you know, sometimes we got to contend with this happening and the low not being taken out. Neither one of these were. So then that's when we got to like front run it a couple of ticks or a couple points, or like just come to this rejection block right here and get out right there. So I'm not gonna lie, like if I knew for certain I was gonna make $5,100 or $5,700, I would most assuredly take that trade. But let's just see if I was willing to risk 500. And this is not a good way to do it because this is not proper stop loss placement. But it just so happens that, okay, 505 is close enough. That I would have been fine. And maybe because, we got this here, this BPR right here, that it went to 50% of. So that's some extra insurance. So, there it is, day 3 of 3 that we've seen the YouTube model in the New York Kill Zone. So we see it there. Let me just pop down into lower time frames to see if there's anything in here that's a little bit cleaner. Everybody in this Sunday study group knows that I like clean. All right. I mean, the 555 looks like it's pretty solid. Let's see right here. 1 minute. 1 minute. This right here would have worked, but we wouldn't have got tagged in right here because the high is 772 and the high is 772. So that could have been an entry there, but you wouldn't have got tagged in, especially on TradingView. So it looks like the entry for this particular model is at on the 5 minute in that fair value gap. All right, so we got that. Then when I was looking at this, I said, well, I'll be darned. We have another setup for the long. So sometimes for me, when I see that price fails to take out this low and fails to take out this low, it's like it's doesn't need to go any further at this time. So then I can be like, let me see if I see a model here. So on the 5 minute, you have this fair value gap right here that you could use, but I like the model to be clean. This is not very, I mean, it's not that it's not clean, but if we put the fib on here, it's not in a discount. And I prefer, it doesn't have to be in a discount for the 2022 YouTube model. I just prefer that. So it didn't come down into a discount, but what it did do here, if I was like really confident that it was gonna, it's ready to go up, is that it came down for an OTE. So there's that. Then let's go down to a lower time frame. 3 minute, kind of like the same deal. Nothing over here. This is not the 2022 YouTube model, but we got an inversion fair value gap. So that's there, you got the order block there. So nothing that, if I'm focusing on 2022 YouTube model, while this would have been a great OTE in the inversion fair value gap, that's not the setup that I'm looking for. So that's fine. Let's look on the 1 minute in the 1 minute. I don't see it other than our 5 minute, excuse me, 2 minute. That's 2 minute. And then we got the 1 minute. I think I saw one over here. So technically, this is it right here. But again, that's like real nasty. I've been an FD girl. I've been an FD girl. So, what if I was looking to get in on that and I was like a $500 stop loss? Then you get stopped out, boom. So that's why we got to have our stop either here or here, and it ain't happening, not here. So I did see, so this right here, I wouldn't have been able to do unless I had, again, I'm trying to stick to the 2022 YouTube model. But if I had the insight to be like, let me try for an OTE, and because this displacement, was so strong and the order block is so big, maybe I'd be like, yeah, let me see if it'll come into 702. So then obviously if it came down there, I'd be safe. But again, I'm trying to do my exercise in the 2022 YouTube model. And so far in the kill zone, the only one that I have found is for the short. And I do not see one for the long in the kill zone at all. Let's look on the 30-second chart. Because maybe I would be like, oh man, we ready to go. And then there you go right there. But still, I think ICT tells us we can go for this fair value gap. But maybe I would be like, maybe I would take that because technically it did come down into a discount, at least here. Then we got our breaker right here. And he says that we can put our stop at the bottom of the breaker. So what if I had gotten in there? If I was here, you know what? I might just be like, yeah, let me go for OTE or something like this, or even go for the lower one. I would like to think that, but you never know in hindsight. But if I did, then there you go. So I mean, there is the 2022 YouTube model. The risk is just a bit much for me. And I'm just gonna look up here. You had another opportunity right here. Right here. But again, I think that risk would be a little bit too much popping for me. If I got in, let's say I got in at 50% again on the breaker, and then I was like, ah, I just really want to be able to be in a position where I can put my stop in the right proper location, either here or down here. But as opposed to based on my risk tolerance, we got it there. If we use this as a stop raid, or basically a stop raid is a run on liquidity, we have this opportunity here. So what have we got in there? Mind you, this is still a 30-second chart. My stop's supposed to be here. I'm not risking that kind of money. If I only wanted to risk 500, 5 hundos, I would be here and I would just miss getting stopped out. And then sometimes there are times where I want to get in on an order block and look, usually I go for here and look how it just didn't even come down there and get me. So I think that's all I got. And then obviously if there was an opportunity that I saw where I wanted to get in down here, knowing that in ICT's lecture this morning, he talked about how price was going to be drawn to relative equal highs. Was he talking about these highs? I thought they were more spread out. But maybe the 5-minute. Oh, maybe they were here. I can't even remember. I gotta look at the video again. But he was talking about, targeting highs and it went straight to it. I was like, ooh-wee. Yeah, I think it was these right here. Yeah. So, if I got in down here somewhere, I could target those. Let's just say I did. And let's say, you know, if I found a way where I wasn't like chasing price and having FOMO and stuff. One of the things I would be like, if I, I would like to think that I would know, because we couldn't take out these lows, that yeah, we can come up here to low hanging fruit and here, but then we could also come back to midnight open, you know? So the bottom line is, there was a setup for the short, there was a setup for the long, and that's all that matters. That I just need to see that, and I need to know where price is headed. So then that's when I can start to look for entries and call it a day, and then go on with my day and live my best life and be done with work within a 3-hour span, and that's wonderful. All right. Anyway, thanks for watching, and we'll see how we do tomorrow. Bye. Bye. Bye.